heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York. Ed Ludlow is off on a well-earned vacation. This is Bloomberg Technology. Coming up, TikTok banned in Montana. It marks the first U.S. state to sign a law banning the social media app across all phones. We'll discuss the legal and logistical implications of the move. Plus, in today's VC Spotlight, we speak with an early AI investor, Cyril Go, the founder at VC firm Conviction and former general partner at Greylock. And we bring you all the tech stocks moving on earnings. We take a deep dive into Alibaba as the e-commerce giant plans a spin-off for its cloud business and much more. First, let's check in on these public markets because, once again, there's real risk on sentiment around the Nasdaq. We're off more than a percentage point at the moment to the races, 134 points to the upside. Maybe a bit of a relief. It seems as though maybe that debt ceiling debacle, we're inching closer to some sort of respite to that. We, of course, though, have a strong jobs number coming out, and that is what's affecting the two-year yield, up some 5-6 basis points. We're still thinking about whether the Federal Reserve really has to curtail the overall strength of the economy, the inflation. Some Fed speaking to that today. We're looking at Bitcoin, currently off by 0.9%. That's because basically every single currency pair in FX is also down versus the US dollar as we think about where the Federal Reserve has to go. Let's move it on. Let's look at some individual movers because Ed is out. I'm going to play on the micro today. Cisco off by 0.3% as they really show some of the drawdown in spending. Remember, this is the company that provides equipment for basically networking, all our internet access, and they're seeing more than a 20% drop in recent business. We're seeing Alibaba also off by 4%. Doesn't manage to ignite that optimism, particularly after the reopening of China to a certain degree. They're not managing to harnessing that growth, particularly in the cloud area, even as we get more detail on where they will spin off the groceries unit, the cloud business as well. We'll dig into that later in the show. Netflix, interesting. Look at this rally up basically to 10%. We know why. They gave us some evidence of the growth that they're seeing in the advertising part of the model. They're going out to upfronts for the first ever time, basically where they pitch to advertisers the wares, the content they're coming, and people really like what they heard. Relief, we're up almost 10%. Meanwhile, though, let's really dig into what is the top news agenda today in terms of tech. TikTok, now officially from January 1st, banned in Montana, setting up a legal battle in the state, and the social media company is already facing some heavy scrutiny from the United States more broadly in terms of its lawmakers. Joining us some more, Bloomberg's Alex Barinka. And just first, dig in on what Montana has said. This is going to be incredibly difficult to enforce.
Incredibly difficult to enforce. So Montana has said, and their governor signed into law a bill that would basically restrict, or they say restrict use of the app, but the onus would actually be on TikTok and the app stores, so Google, Apple app stores, who would, as they say, be fined $10,000 a day for every day that TikTok is made available. But it's really unclear from this bill how they're actually going to enforce it. And certainly, Caroline, this bill will face a legal battle. This is a state basically kind of making a decision to limit an app only within its borders, while the federal government itself has been looking at it. But something like this is pretty unprecedented. The company has told us that this is a regulation on free speech. They have pushed back on it. We've actually already seen a group of creators sue because this bill was signed in the late hours of last night. So certainly a really interesting move by some who are pro-banning TikTok, would say, good job, Governor of Montana, for restricting this on national security concerns. But critics of this bill would probably say, hey, why is this state kind of getting involved in what should be a federal move? And
maybe this puts the onus back on a federal move, Alex. But remind us, the ways in which TikTok has tried to alleviate concerns from a national security perspective is by saying, look, we're working with Oracle. We're ensuring that the data isn't in any way being accessed by China. Just tell us, you did some really deep dive analysis on what their deal is with Oracle at the moment.
Right. A colleague and I wrote about where it stands, this deal called Project Texas. Basically, TikTok has put Oracle up as this American partner who's going to wall off the data for U.S. users to alleviate national security concerns. And that process has already started. But what we broke this morning is that a large chunk of the really ambitious work of Oracle actually reviewing TikTok's code, which is pretty unprecedented, and being the entity that submits the app to the app stores, that work has not yet started, even though TikTok has alluded that it has. This is all according to a person familiar. And Oracle will not start that work unless there's a final agreement in place that the government has signed off on. You'll recall there is a national security review going on. It's an interagency review in DC, and that has stalled because the Justice Department has not been happy. So without that moving forward, without a final sealed, done and dusted, U.S. stamped proposal in place or legislation that forces some kind of move, Oracle will not start doing that really in-depth work that TikTok has really used to say, hey, look, your stuff is safe because we have an American partner, actually making sure there's no backdoors here for the Chinese government.
Fascinating. Alex Barinka, thank you for bringing us the latest. It's great reporting and the breaking of that news today. Go read it on the terminal and on .com. Meanwhile, we've got to dig a little deeper here. Carl Szabo is with us. He's George Mason Professor of the Internet Law and also Vice President and General Counsel at NetChoice. Now, that's a lobbying group aimed at making the Internet safe for free enterprise and free expression. So I'm going to hazard a guess here, Carl, that you're pretty anti what we're hearing from the governor and Montana more broadly today.
Yeah, thanks for having me on. This is something that should scare all of us because this is exactly what we don't want the government to do, and it's what the government can't do. It can't decide what websites we can visit and what apps we can download. Imagine if the government of Montana came out and said you can no longer go to Bloomberg.com. Of course, everyone would be apoplectic, but that's exactly what we're seeing here with TikTok. At the end of the day, what we are ultimately going to see is a legal challenge on this because this is a clear violation of the First Amendment. The government can't ban speech, which is exactly what this is. Simultaneously, it is a clear violation of something called a bill of attainder. It's a legal term that we use rarely, where you can't criminalize an individual, and that's exactly what you're seeing here. So this is a slam dunk case of unconstitutionality, but more importantly, it's a dangerous precedent against free speech, free expression, and free enterprise in the freest nation in the world.
Remind us why, thus far, they've been able to ban them on government phones.
Yeah, the bans on government phones, I actually don't have any issue with. I'm an employer. Many employers are watching this program right now, and we all have rules and restrictions on what our employees can and cannot do on their own company devices. And we can say, well, you can't go to this website, you can't download that app. And so the government is perfectly free to do that for their own employees, federal employees, state employees, local employees. In fact, as a taxpayer, I don't see any reason why government employees should have TikTok on their government devices, because when I'm paying their salaries as a taxpayer, I expect them to be working, not producing TikTok videos, not watching entertainment videos. So that's why the government can do it on their own devices. But it is very different from the government then coming in and telling me, telling you, telling everyone else out there what websites they can visit and what apps they can download on their own personal devices.
So, as you say, and you've come out saying this is unconstitutional, TikTok has come out saying that it's against free speech. Legal arguments abound, but it does put the onus back on the federal government and what is currently being debated by the administration to either ensure that national security is preserved or indeed curtail TikTok within the United States more broadly. Is there any way that the federal government could enact this, do you think?
The thing at the federal level is TikTok is kind of a distraction. It's fig leaf. A lot of lawmakers don't want to have an important, necessary discussion on the U.S. dependency on China, national security, cybersecurity, or privacy. But there is legislation today before Congress that they could look to do. They could create a national standard on cybersecurity. They could look to create a national standard on privacy laws. And what this will do is it will protect all Americans, regardless of whether an attack is coming from outside the U.S. or from within. Let's remember, some of the biggest data breaches in U.S. history came from inside the U.S., whether it was SolarWinds in Texas, whether it is the hack last month of the health information of members of Congress, or whether it was a government employee deciding to dump all of our secrets about Ukraine onto the internet to impress their friends. So we need to harden our critical infrastructure regardless. And focusing on one business, one entity, one nation distracts us from the important work that Congress must do to harden these critical infrastructures and make us all safe.
More broadly, when you're looking abroad at what's occurring, we are seeing other countries, the UK, for example, also banning on government devices. Is there anywhere that is thinking that they have to curtail certain social media apps? Because in this, of course, discussion that's been leveled by Montana, they don't just mention TikTok, they also mention other ByteDance-owned apps, CapCut, Lemonade, but also there's Telegram, which they sort of foresee having a link to Russia.
So there is certainly one nation that is in the business of deciding what websites and what apps its citizens can use, and that's China. They have the Great Firewall, where if the CCP doesn't like what you're saying, the citizens can't see it. It's a horrible model for the rest of the world. It is the antithesis of what America stands for. So I expect the U.S. to lead the way, to reject bans on speech, reject bans on apps, and push the notion that citizens and free people should be able to decide what is or is not appropriate for them. Because at the end of the day, if I have concerns about TikTok, I just won't use it. Yeah. I'll use something else. And that's the freedom of choice. That's the freedom that we have here in America. And unfortunately, in Montana, that freedom is being taken away from its citizens.
Very briefly, of course, your association members are TikTok, but they're also Amazon, Airbnb, Etsy, Meta, a number. Do your association members currently feel that regulation in the US is working for them or against them?
You know, across the board, NetChoice is out there fighting every single day to plow the field for free expression and free enterprise. And we are all behind the notion of creating a national standard on things like privacy law or cybersecurity law. Because at the end of the day, what that will do is secure Americans. And more importantly, it will make it easier for Americans to know how their privacy is treated, how their data is treated. And for businesses out there, it gives them a simple, easy one standard to follow, which drives down costs of compliance and makes it easier to spend that money on innovation. We need innovation at the speed of technology, not at the speed of government, and that's what we all agree on.
Many would say that as we look at AI and plenty of the other things being discussed. Carl Szabo, great to have some time with you. George Mason, Professor of Internet Law and, of course, of NetChoice. Sticking with social, watching shares of Meta and Google. Now, interestingly, we had another key decision coming from, well, the Supreme Court, a ruling that left in place a broad liability shield for social media companies for content posted by users. Basically, it insulates Twitter, Facebook, Google from claims that they provided assistance, in particular to the Islamic State terrorists. Currently up 1.3% on Alphabet. Meta, just up by 0.1%. Coming up, more on China-US tensions, but this time we're looking at the race and rise of generative AI, an area of investment that has also been dubbed by many as green shoot in the VC world. We'll talk all about it. Sarah Groves with us, founder of Conviction. This is Bloomberg.
This uniquely American innovation ecosystem is still the world's envy, and I want us to make it stronger. I've never seen rapid gains that we're seeing now with frontier language models this fast. We lead, the world is trying to catch up, we're still ahead. Let's continue.
Of course you recognize him, former Google CEO there, Eric Schmidt, testifying at a House hearing yesterday, which, funnily enough, was focused on China's embrace of AI for warfare. He also warned that, look, while the US still has an edge in the key areas like AI and quantum computing, China is likely having more people working on strategic AI and advises that the US must redesign its military to respond to that threat. Look, let's talk more broadly about artificial intelligence, about what feels like a race, whether it's between US and China or indeed company versus company here within the United States as well, particularly when it comes to generative AI. Sarah Go, perfect voice, founder of Conviction. It's an AI-focused VC firm built to serve software 3.0 companies, as you call them. And of course, you've got a long history with Greylock and sitting on plenty of boards there. I'm interested at the moment as to where you're seeing the most value being attributed to AI companies.
Thanks for having me. We are very early in the AI revolution, and I think it's a very general technology. It has huge potential to improve people's lives and productivity and contribute to complex problems in climate and education and science. In the near term, some of the areas we're seeing the most immediate value include democratization of creative capabilities. So giving everyone the ability to generate image and voice and video where you used to need to develop creative skills, and trying to give experts leverage. So think of companies that enable lawyers to do their work more quickly, or data scientists to leverage their work for a broader business audience. So we've invested in companies like Seek and Harvey in this vein.
We're looking at some of your portfolio companies there more broadly, and there is, of course, the minute you start to say leveling the playing field, democratization when it comes to image, to voice, copyright concerns come to the fore. How are you seeing the founders that you're working with really get ahead of the curve of where regulation could come?
Yeah, absolutely. I think there's a series of tricky issues that companies playing in this field need to consider. And that includes copyright, includes disinformation, it includes abuse of these technologies by malicious actors, as you'll see with every technology tool, like the internet, of course. And so we expect when we invest in companies for founders to think about these issues from a responsible AI perspective from the very beginning.
And it's interesting, of course, you've been someone who thought a lot about Web3 and indeed the democratization of finance in that way. Crypto immediately comes to mind. Some people are trying to compare and contrast the way in which the AI ecosystem is looking to get ahead of regulation or at least start asking for it sooner vis-a-vis the crypto sphere. But is that our own naivety to realize how AI has been being built, you know, for decades at a lot of these big companies, and certainly the startups as well? We all suddenly feel like it's brand new and shiny because we're now touching it as a consumer. But are we behind the curve when it comes to regulation, or are we managing to be at a better pace this time?
So this may not be a very popular view, but I think we actually need to be going faster on the regulatory front. That doesn't necessarily mean licensing, for example, to train models. I'd be cautious about cementing the concentration of power to the few organizations today and allowing them to decide who has access. But in terms of the governance questions that come about when you have a technology that is so general, progressing at a rapid speed, that justifies anxiety, and it should justify investment from both the private sector and academia and policymakers to understand and get ahead of the changes that will come in society. So I think we're going to need very strong partnership between industry and policymakers to, you know, reap the benefits of AI and mitigate some of the concerns. And we're committed to engaging to inform and contribute to that process.
Yeah, are you contributing? Do you feel the administration and those in power are speaking with the right people within this field?
I think there is a rapid acceleration of engagement from both sides over the last few months. And so we've been participants in that. These are complex issues, right? Managing the misuse of AI is something that must be arrived at through an inclusive and democratic process. And it's hard because it's also technical, right? I think people are learning a lot. But I do think there's an opportunity for perhaps pro-technology policy making that is, for lack of a better term, not just defensive, right? Protecting against some of the issues that we discussed, but also really goes on the offensive, right? In that you just showed a clip from Eric Schmidt. I think that this is relevant from a national security perspective, relevant from a sort of economic stability perspective, and also relevant in that, you know, it'd be a real shame if some of the sort of more ambitious applications of AI in, for example, science or education were not reached because we didn't get regulation right.
Yeah.
I'm very excited about, there are some companies in our portfolio that are in small ways today already contributing to that. We have a company called CoRise that uses AI to reduce the cost of reskilling for workers. And so I think there are a lot of benefits that we also want to support here.
Yeah, where do you fall on that general optimism, pessimism viewpoint on whether this can ultimately be beneficial to society from a we all get more time to do more impactful work, or is there a worry that jobs will be reduced and people won't be reskilled at the rate that they need to be?
Yeah, I think it would be intellectually dishonest for a technologist working in this field to not have that worry, right? And so, I founded the firm because I believe AI is a technology of abundance, but that won't happen. The distribution of that abundance will not happen automatically, right? And so this is why I think there's real room for, nuanced policy making here. And so the technology is only good as the guardrails we give it. But I think like the magic of the American innovation system is like technology drives wealth creation. There are so many things that are much cheaper for everyday Americans than they were 10 years ago because of advancements in productivity and technology. And like one of my greatest hopes for the AI revolution is that a few of the fields that have been quite resistant to decreasing in cost, like health and education, we can make some inroads on.
Sarah, I wish I could speak to you much longer. And of course, you've got a great podcast we can all listen to, founder of Conviction. We thank you for your time today. Meanwhile, coming up, the UK's biggest telecom operator is planning to cut tens of thousands of jobs by 2030. We'll dig in. Meanwhile, let's just check in on Micron. You might have seen the story, scoop here over at Bloomberg, that they're receiving about $1.5 billion of financial incentives from the Japanese government. Look, it's all about helping to make the next generation of memory chips in that country. This is about global supply chain and ensuring that it's closer to home for many. From New York, this is Bloomberg. It is time now for Talking Tech. First up, Sony is weighing a spin-off and separate listing of its financial services unit. Now, the plan aims to fuel investment into its other divisions, like gaming and electronics. Sony's financial arm currently operates one of the few online-only banks in Japan and constitutes about, 12% of sales. Then let's look also abroad. UK Prime Minister Rishi Sunak says the country will see about $22 billion of new investments from Japanese businesses in the next decade. It's including a bilateral chips partnership, dubbed the Hiroshima Accord. It seeks to deepen economic and tech cooperation between the two countries as fears over China's threat to supply chains they continue to grow. Now, also in the United Kingdom, British Telecom, or BT as it's known, is planning to reduce its workforce by, get this, 55,000 people by the end of the decade. The cost cutting is expected to roll out after it completes its nationwide fibre optic rollout. Rival Vodafone also announced plans to reduce its headcount, highlighting the industry-wide struggles facing telecom carriers. Coming up, we have got to talk about Alibaba, planning a spin-off of its $12 billion cloud business, one that saw revenue drop in the latest quarter. We'll bring you the details next. But first, let's just have a quick look at video game developer Take-Two, seeing its biggest jump in about a year after its fourth quarter report. Look, the video game company also hinted at a release date for the next version of its popular Grand Theft Auto franchise. Over the year, up 34%. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Now, let's get a check on these markets halfway through the trading day. We're currently seeing actually some more buoyant signs, particularly in big tech once again. Look, we're up more than a percentage point at the moment in terms of the NASDAQ. Some big tech on top. We'll dive into the individual moves in a moment, but maybe some anxiety draining out when it comes to the debt relief and the debt ceiling debacle that seems to be spiraling towards us. That looks as those anxieties dialing back a little bit, maybe closer to the end as we hope. And currently also seeing the jobless claims coming in strong. The overall resilience of this US economy, but it also means inflationary pressure is there. It also means the US dollar is going higher as the Federal Reserve might just have to keep on thinking about tightening its grip on inflation. We're looking at Bitcoin off by more than a percentage point as the dollar rises. Turn your attention, though, to some individual names, because I do want to look at some of the higher side is NVIDIA, up 3.8% again. This company just continues to benefit from, of course, the AI allure. But also, remember, it's still bringing us new GPUs, and some of its new chips are going to be serving the gaming community in particular, people liking that. Apple up more than 0.9%. Thinking of gaming, we think about that mixed reality headset. We're expecting that June 5th. We're going to dig into that with Mark Gurman. Cisco, though, on the downside, and one of the biggest point drags on the overall NASDAQ today. We know why. They're, of course, seeing lackluster orders for some of their equipment of late. Let's talk about other, perhaps lackluster areas when it comes to earnings. And Alibaba are really not managing to show much strength. It showed, in fact, weaker e-commerce sales than perhaps had been expected. They were down by 4.8%. almost 5% on the ADRs here. However, the company has been improving how it's basically restructure itself, particularly the spin-off of its cloud services division. Pleased to say, matchy today. Thursday is the day to wear plum, is one Isabel Lee. I'm pleased to say that we got the memo. Talk to me a little bit about what's happening in terms of these earnings, because it looks as though we thought China's reopening was going to galvanize, and revenue is up a bit, but not enough.
Yes, so shares are tanking and investors are really unhappy because they thought this is the quarter that, after China was closed for several years, it's a big reopening. We're going to bank on this and we're going to see growth. But it was a bit disappointing. So a couple of takeaways. Quarterly sales missed estimates. That's due to a shrinking commerce business. We also have cloud revenue declining for the first time on record. And that's a big deal because Alibaba Cloud is the largest cloud provider in China. It's a multi-billion business. And of course, the bread and butter, which is the customer management fees, that also shrank for the fourth straight quarter. So bets really of a China reopening have gone south because we've found that Chinese consumers have preferred eating out, going on trips, going to karaoke rooms and saying their hearts out rather than shopping online, which they have been doing for the past 2 years when they were stuck at home.
Like us, they're a bit more into their experiences at the moment. What about, though, this restructuring? Many people holding their breath for really the details coming from Daniel Zhang here. And well, the focus is on the cloud, right? And the spin-off thereof and some of the other logistics businesses.
So many people were really looking at these earnings calls because that's what they wanted to do. In fact, some were saying that this is what we care more about rather than the earnings because it's the future. It's a historic change. It's been around 7 weeks since this was announced, and a lot of people are speculating this is, of course, with the approval of the Chinese government or with their blessing. And some takeaways, they did give some details, which made a lot of people happy. For instance, Cloud Misses, to your point, it's going to be an independent publicly listed company, likely in the next year. They also have their logistics business aiming for an IPO 12 to 18 months. The grocery chain is also seeking to list in the next 6 to 12 months. And the international commerce business will seek external funding. So many changes there. I still love the Bloomberg opinion columnist Tim Kalpin calling it 6 baby babas. And Alibaba is really unique on its own because it's one of the few, if not the only one, that people look at as a sum of its parts basis. So they look at the little parts, and that's how they value the company, especially with this big historic breaking up happening.
And they're going to have sort of rotating cast of characters at the earnings statements going on, right? When they speak to analysts, it'll be one of the other leaders and one of the baby babas coming on.
So that's interesting. Are they going to have one, or are they going to be really treated as an independent company? And one important point is, yes, they will be split into 6, but there will be some favorites. Obviously, some businesses will be better and stronger than the others. So we're going to see the winners and the losers down the line.
Great to have you on. Thank you, breaking it all down, Isabel Lee. Meanwhile, let's just stick with e-commerce a little bit more. Consumer giant Walmart, look, it's reporting earnings today, really lifting its annual profit forecast after its discount model Walmart Plus is powering new market share gains in the United States. So we see a pop in the shares just coming back from their highs at the moment. But coming up, all things, you guessed it, artificial intelligence. Founder of Landing AI and Deep Learning.ai, and co-founder of Coursera. That's going to be next. Where are we in terms of the education front? And let's all just keep an eye also on the shares of Panasonic as they trade the Tesla supplier plans to roughly quadruple annual battery production capacity to 200 gigawatt hours by March 2031, a sign that it anticipates greater demand for electric vehicles. It has outperformed over the last couple of days. This is Bloomberg. This is a good one. A new exchange-traded fund, an ETF, tracking companies that benefit from the rise of artificial intelligence is hitting the market, looking to tap into what is a growing frenzy for the technology. The Roundhill Generative AI and Technology ETF will begin trading under the aptly named ticker CHAT on Thursday. The actively managed fund will invest mostly in companies that derive portions of their revenue or profit from generative AI. Let us stick on that theme. Perfect voice for now. Andrew Ng is joining us, general partner at AI Fund, also chairman and founder and CEO of Landing AI, also founded Deep Learning.ai, is also the co-founder of Coursera, and also, of course, adjunct professor at Stanford University's Computer Science Department. Ooh, titles and a half. And let's start on the AI Fund in particular, Doctor, because it's a venture studio. Which particular applications, which businesses, what industries do you want to disrupt what you grow there?
AI is like electricity 100 years ago. I think it is a position to transform all industries.
My friends used to challenge each other, name an industry that AI will not transform, and we actually struggle with that. I once stood on stage and said, maybe hairdressing, can an AI cut someone's hair? But my friend who was a robotics professor stood up later and pointed at my head, and she said, Andrew, most people's hair can't get AI to cut their hairstyle, but your hair, Andrew, a robot could totally do that. So I think we're actually going to all sorts of industries today.
Brutal. Your hair looks very nice today. Look, what's so interesting about your background is not only the wider range of companies that you founded, but look, you were Google Brain Team, for example, really at the very beginnings of AI within that particular big beast, also Baidu. I'm interested as to how you...
I started and led the Google Brain Team. It was great fun, and my team built a lot of Google's modern AI capabilities. Yeah.
So with that, how do you worry about big companies, big corporates having so much talent, having basically ability to, maybe even negotiate agencies that require licenses going forward? Do you think that we will see a democratization in how AI has grown, or do you think it will be owned by some big companies that already exist?
There are opportunities for both large companies and for new startups. This is where I see the value being generated. There's the hardware layer, companies like NVIDIA, Intel, AMD, maybe new entrants as well. That will create a lot of value. There's the infrastructure layer, including the clouds, as well as the AI tool builders. That looks quite competitive, but also opportunities there. And then the massive untapped opportunity that most people don't realize is the application layer. So I think that AI is a general purpose technology. That means it's not just useful for one thing. I built AI ad systems that moves massive amounts of dollars for some of the large advertising platforms. But AI isn't just useful for ads. It's useful for robotic process automation, medical diagnosis, in agriculture, in manufacturing. And I think it's actually very difficult for any one company to simultaneously build businesses in everything from maritime shipping to education to healthcare to financial services. And so I think the most efficient way to actually realize all of these diverse use cases all across the economy is to build multiple startups to attack these different opportunities. And actually, that's what my venture firm, AI Fund, does. And I think the application layer has a lot of untapped opportunities.
Not just, so no one company can own all those fields. But what about one country? Everyone seems to have deep anxiety about the so-called race, US versus China. As someone who is at Baidu, how does your expertise instruct that view?
Without speaking to any one country, I feel like most countries at this point in time are probably underinvesting in AI. 10 years ago, we saw the explosion in deep learning, machine learning, basically labeling things. Label, what's the text transcript for this? Label, will someone click on this ad? Label, this medical diagnosis. 10 years later, we've not yet finished sorting out all the valuable use cases where this can be applied. And in the last few years, we now have generative AI, which is another general purpose technology, which again is useful for all sorts of things. And that means that the number of applications to which we can apply AI is even vastly greater than before. This means that for most nations, the next decade will have a lot of opportunities to figure out a lot more concrete use cases to create a lot of value for everyone. And I think, frankly, most countries should invest more into tech and in research and in education around AI.
You wrote quite a strongly worded rebuttal, shall we say, to what had been the proposal, the letter, the signatories saying, look, put a halt, put a pause, particularly on generative AI development at the moment and the big large language models. You said in particular it was ill-advised largely because, the genie's out the bottle, but ultimately that, they were unrealistic in the way in which AI could upend humanity, but also we don't want to slow down innovation. Where are you on just how powerful AI could become, or at least where the regulatory landscape is moving at the pace at which innovation is too?
So I think AI does have risks. There is bias, fairness, concentration of power, amplifying toxic speech, generating toxic speech, job displacement. There are real risks that the AI community takes seriously, working on, hopefully, actually, for the most part, working really hard to make things better. Then there is the overhyped existential risk. Will AI wipe out humanity? I'm less worried about that for a couple of reasons. One, the hard takeoff scenario where AI isn't working that well yet today, but suddenly overnight, May 31st, 2023, we suddenly have sentient superintelligence, and then 48 hours later, it's taken over the world. Technology doesn't work like that. It actually grows gradually, so we'll see it coming. And humanity has lots of experience controlling entities any more powerful than a single human. Corporations and nation states are much more powerful than one person, but we've, for the most part, managed to steer them for the common good. And then lastly, I think humanity does have existential risk. Maybe an asteroid will do to us what it did to the dinosaurs, or climate change leading to massive depopulation. And I think, or the next pandemic, fingers crossed. When you look at the actual existential risks that face humanity, I think AI will be a large part of the solution. So if you want humanity to survive and thrive for the next 1,000 years, I would much rather make AI go faster to help us solve these problems rather than slow AI down.
Well, let's talk about thriving. It's really interesting that one particular sort of public market capitalization that's been upended is the education companies that we see listed. I think of Chegg and how much they started to reference that ChatGPT might be slowing their own growth. You are a man who knows and understands online education thoroughly. You're already developing a way in which you can perhaps retrain, reskill to make engineers prompt engineering developers. How are you seeing the landscape change for tech talent right now?
I think that in the tech talent landscape, I want to share one thing that is really obvious to AI insiders, but is not widely known, which is the rise of AI, things like ChatGPT, not as a consumer tool, but as a developer tool. So many people have tried ChatGPT. If you haven't yet, go try it, or Bard, or the Microsoft Edge Bing search. Fantastic consumer tool. What many people do not yet understand is that these tools are very powerful developer tools as well. And so there were AI systems that used to take teams like a year to build. They can now be built in a day or two. And so a couple of weeks ago, collaborating with OpenAI, my team, DeepLearning.ai, launched a free online class, ChatGPT prompt programming for developers, to teach people how to use this to program AI capabilities really fast, really quickly. And we actually had 500,000 enrollments in about 2 weeks. Don't know if it was the fastest growing course in the history of online education. But I think that this massive wave of new applications that we can now build much more cheaply and much more quickly we're just at the start of that. And I think most people have not realized how big a flood of innovation this will cause in AI.
Fascinating. Thank you for coming on. Hope to have you on again soon. Dr. Andrew Ng, of course, founder and CEO of Landing AI, of course. The AI Fund is where he's currently helping grow startups. Meanwhile, coming up, Apple raising the stakes in the mixed reality market. We're talking to Warpin CEO Emma Rudestad about the company's new VR headset. Plus, keeping our eye as well on Grab. It's a Singapore-based ride-hailing company, of course, food delivery there too. It's reporting slower spending by customers. Look, it's grappling with high rate of inflation, rising interest rates. Sound familiar? This is Bloomberg. Time now for what's going viral. Well, Apple's long-awaited mixed reality headset, that's what is. It's finally becoming a reality. Bloomberg's Mark Gurman, you've got a great piece out today. And June 5th, we hold our breath.
Yeah, don't hold your breath much longer. On June 5th, Apple will be introducing its next big thing. We actually first wrote about the headset in 2017, that this is something Apple was working on. We've been reporting on it for a number of years now. All sorts of details you can find on Bloomberg.com and Power On. Our latest story today in Business Week details the product's development, how the initial dream was standalone augmented reality glasses. Lots of technical challenges and compromises needed to be made. And now we're going to be getting something that's sort of in between a classic VR headset and the dream of AR glasses. This is a mixed reality headset. It's going to be quite light and slim with an external battery, very powerful with an M2 Mac-grade processor. The idea being this device would replace many of the tasks done today on an iPhone, Mac, or iPad, focus on gaming, virtual reality video conferencing, collaboration remotely through different applications, productivity, gaming will be a big focus, meditating, working out at some point as well. So this is going to be a pretty jam-packed and expensive product.
Yeah, it better be for $3,000. Mark Gurman, absolutely brilliant. Go read his pieces. We thank you so much for giving us that setup. And let's dig into, well, someone who's helping build these new augmented and virtual realities, whether it be meditation, whether it be online learning. Emma Rudestad is with us, co-founder and CEO of Warpin. It's a Swedish VR training company that's helped businesses, of course, its initial creator with Magic Leap, with Meta, even Disney and Ferrari. They train staff and market products. Emma, just the possibilities here. It is a big price tag for Apple's product. We know that Meta perhaps has struggled a little bit with the sales of its Oculus and the like. What are you seeing about the overall desire of people to want to interact in this way?
Well, let's start off by saying that we are in the beginning of the next technological revolution, right? So for the first time, we're seeing a lot of new technologies developing at the same time. We have augmented reality, virtual reality, artificial intelligence, everything coming at the same time, creating new opportunities that we haven't seen before. I mean, Apple, they stand for quality, and they have been working on this headset for many years, obviously. So everyone is, of course, very exciting of what they're going to release.
Yeah.
But what we are seeing from our point of view is the benefits that we're seeing with these technologies are a greater shift, I think, than with the smartphone or the internet.
But what needs to happen? Does the price point need to be more accessible for this really to go mainstream?
Well, I think, right now we are in the business to business where we're seeing the real results, right? If you're using virtual reality for training and education, for example, you can lower your costs with 80%, have a retention of 70%, and you learn 4 times faster than any other training method out there. So, I mean, for this to become more mainstream, we need a headset that is more fashionable, that is a little bit cheaper. And of course, content is king. It has to add value to us. It has to make sense for us to put on a headset instead of using our phones.
And I think that's the point, Emma, is many would feel that actually, until you've tried it, you can't knock it. But the trying of it is going to be the hard thing. How do you get out there, market these products? How do you ensure that everyone can see the benefits?
Well, I think that, to your point, the content is king here. We need to have experiences that really showcases what these technologies can do. Because instead of being on the internet or just looking at the internet, we're going to be inside the internet, using all of our senses and engaging in whole new ways. And I think when we can see content and apps that will really show how these technologies will change our life, then I think it will become much more mainstream. And I think gaming and social media and those areas are really exciting and fun. But the greatest benefits for humanity will be in training, education, and just like the first internet revolutionized these areas, so will Web 3.0 and the metaverse.
Of course, there's lots of hand-wringing about that. There's worries. In the same way you mentioned artificial intelligence, we're worrying about the regulation of that, the safe and ethical use of it. We're worried about people living too much of their lives in a virtual or augmented reality. How are you thinking about that? Because I know over in Sweden there's much thought to this.
Well, I think that we have almost lost the whole generation for a 2D world, right? We missed when we had the smartphones to actually educate people on how to communicate with each other. I see this actually as a window of opportunity where we're leaving this very limited 2D world behind us and entering a more natural state of a 3D world. And I think when we're entering these worlds, we're going to see how we spend our time and how we can use this to feel better and to connect with each other. You are 3.75 times more emotional connected to the content that you can experience. So I think that we can use these technologies to kind of bridge those gaps that we have built.
And Emma, when we first introduced you, we heard of all the companies you've been working with. In the economic environment and realities of it, are companies as willing to venture into this field?
Yes, and I think that what we need to solve are problems that we're facing at the moment. So, I mean, by the year 2025, 50% of everyone on the planet will be needing reskilling or upskilling. So, and the methods that we're using are costly and very time consuming. So companies are looking at new ways to solve problems that we're facing. And I think that if you're a company today within the production line, retail, or those types of areas, you need to have a look at a metaverse strategy.
Emma, great to spend some time with you. Thanks for staying late in Stockholm for us. Emma Ridderstad, co-founder and CEO of Warpin. Meanwhile, that does it for this edition of Bloomberg Technology. You do not want to forget about our podcast, Catch Up. If you can't catch us live, you can find it on the terminal as well as online on Apple, Spotify, and iHeart. This is Bloomberg.